Today I'm going to talk to you about one specific aspect of the budget last week, and that aspect is income tax and what's changing, and more importantly, what's not changing. So firstly, there is no change to the rates of income tax. So still, basic rate taxpayers will pay 20%, higher rate taxpayers will pay 40% tax, and additional rate taxpayers will pay 45%. So no change there. The personal allowance that we have, which is currently £12,500, and remember this is the first part of our income which is charged to tax at 0%, so essentially the first tax-free bit of our income, that is going to rise slightly to £12,570, and that will be effective from the new tax year. The threshold between the basic rate and higher rate, that's also going to rise slightly as well. It's currently £50,000. It's going to go up to £50,270. So that's good. It means that if our income increases, say, for example, if we get a pay rise in line with the rising cost of living, then these thresholds have increased as well. So our tax position, if these two things move in tandem, will stay largely the same. However, after that, there's going to be no further change to these thresholds until 2026, which means that if we do receive, for example, pay rises, if our taxable income increases year by year, but these thresholds don't change, we will actually end up paying more tax potentially at higher rates because our income has crept up into the next tax bracket. So what can I do about it? Well, I think that the simplest thing to do is either, firstly, you could accept that you've received a high level of income and therefore you're going to pay more tax, especially if it moves you up into the next tax bracket. Or if you don't want to do that, what you could do is consider making pension contributions. So let's say, for example, a threshold between the basic rate band and the high rate band. Let's say that threshold is £50,270, which is what it's set to be. If you receive a pay rise that goes over that, what you could do is take that excess over that threshold and contribute it into a pension. If you do that, you receive tax relief at your highest marginal rate. So remember, you've jumped up into the higher rate tax band there, so you will receive tax relief on your contribution over and above that level at the same higher rate. So essentially, rather than paying 40% income tax, you will get 40% tax relief by putting the money into your pension. This is a really good way of controlling the amount of tax you pay and sculpting your income in such a way to get the very most out of your money from a tax perspective.